Let's get started with talking about the markets, and Rahul Sharma is right here with us, technical and derivative research head at JM Financials. Rahul, thank you so much for joining in with us this afternoon. And Rahul, let's start by talking about the markets, right? What is your view in terms of whether you look at the benchmark indices as of now? It's been a bit flip-floppy in the last couple of days when you look at it in terms of trade. So what is your view now on the Nifty? Where do you see it headed? We have seen it cross and go below the 19,700 levels at one point of time in the week as well.
So we are seeing markets challenging both sides of the spectrum. Nifty trying to breach the 19,800, 850 mark, failing to do so. On the downside, we've seen supports being taken in spite of being very oversold. Now, clearly, there is a lack of leadership that is coming in. So, like one particular sector is sort of taking the Nifty higher. In fact, Bank Nifty has been a major pain point. Yesterday, there was around 32% addition in the combined open interest, mostly on the short side. Most of these shorts held by FIIs on the Bank Nifty. Now, clearly, the banking index is a problem as far as the broader market is concerned, around 35% weight in the Nifty. Now, I think the best thing to do is, adopt a stock-specific approach, a bottom-up approach, because Nifty on the upper band is 19,800, 850. On the lower side, somewhere around the 19,400 mark. I think we should continue to grind into in between this range for the next few trading sessions. So no real commitments, coming out from the Nifty index. As far as banking index is concerned, if we do manage to sustain more and more below the 43,900 mark, that should invite more pain into the banking index, because this entire last last 3 months of trading that have happened, 44,000, 43,900 has been like a base for this entire move. Now, if this gets broken, which it did yesterday on closing basis, and today also we've sort of intraday we've broken that. Below this, there is definitely a red flag as far as the banking index is concerned. We may very well be on the path to test the next support area, which is a 200-day moving average. But I think the bigger support for the banking index is close to the 42,000 mark. So from a setup perspective, clearly banking is the favorite shorts as far as the the market weakness is concerned. And as far as Nifty is concerned, as long as we do not break the 19,400 base, I think Nifty should continue to remain range bound. So one can adopt their trading strategy based on the levels that we mentioned. But on the flip side, I think it is better to stick to stock specific approaches. Stocks which have fallen less in this correction can be looked upon, or rather defensives like pharma, for example, which have been doing well in this entire period. So it's best to stick to defensives, best to stick to relatively stronger setups and sort of navigate this period of volatility, especially given the geopolitical scenario and commodities which are slowly gradually boiling towards the upside.
Point taken. The favorite shorts in the system seem to be the banking names, and it's better to have that stock specific strategy. So let's just do exactly that, Rahul. What are the stocks that you are liking at this point of time?
Yeah, so on the long side, pharma is something that we clearly like. Pharma index has been relatively strong, and Sun Pharma is one stock which one can look to buy. You can buy at these prices, or once the 1165, 1170 area is taken out, you can look to add more. I think there is an imminent breakout which is expected, which can take the stock up to 1250 on the upside. Have a stop loss placed at 1130 odd, and this is one stock which can be traded for the breakout. Another stock which can be traded at these levels is Max Financial. So we've seen some of the financial names do well in this dull scenario, and MFSL is one setup where we feel that the stock is very much headed for 4 digits. So the target is 1,000 rupees on the upside. One can look to buy at these levels, have a stop loss at 904. And we feel that once Nifty is, even if Nifty is not out of the woods, these two stocks can sort of, participate in their own way. So Max Financial and Sun Pharma are top 2 picks going on the long side.
Okay, clearly you are, kind of heading towards the pharma sector as your go-to space. But if I had to ask you to take a pick in the IT pack, which names come to mind? Because of course today there seems to be a bit of breakout on LTI, Mindtree, and even the mid-cap names, the likes of Persistent, etc., are holding up.
Yes, absolutely. So mid-cap IT names are seeing some very good traction, and volume-based traction, if, is even more comforting. I think going by the way the current setup is, in fact, we would look at something like an emphasis where the relatively, the stock has not done so much. In fact, the stock is trading at a crucial support of 2250, which is the 100-day moving average for the stock. So one can look at emphasis for a bounce back up to 2400. Something like LTI Mindtree can be considered in case there is an intraday dip. The structure of these IT names continues to be positive, although large cap ITs have taken sort of a cooler, especially after the results of TCS. But I think IT as a space continues to look good as a defensive, as well as a sector which has been relatively doing well since June started. So the mid cap IT names do continue to look good. One can look to switch to large caps as well once the current time correction gets over, which should hopefully get over in the next couple of weeks.
Right, Rahul. Thank you so much for joining in with us this afternoon on ET Now and giving us an understanding on that as well.